Hi, everyone. Joining me today from Southern California is Ted Bischak, co-founder and partner at Ocean West Capital Partners. Ted, welcome to Healthy Air.
Good to be here with you, Eric.
I want to share Ted's background briefly to provide context for our conversation. Ted Bischak is co-founder and partner at Ocean West Capital Partners. He's responsible for all property operations, including asset management, property management, construction management, and physical due diligence upon acquisition or disposition of managed assets. Prior to the formation of Ocean West Capital Partners, he was Senior Vice President of Asset Management for Maguire Properties, responsible for the firm's entire portfolio of 21 million square feet of real estate assets. Before joining Maguire Properties, Mr. Bischak served as Senior Vice President for CommonWealth Partners, where, in partnership with the CalPERS pension fund, he was responsible for all operations activities, including in-house property management, tenant improvement, operational leasing, and asset management for the $1.5 billion portfolio, and directed all property level acquisition and disposition activities. Additionally, Mr. Bischak has held senior management positions with Tooley and Company and the Irvine Company, where he is a key member of the development team on over 6 million square feet of new office development product, multiple retail and hotel projects, as well as 6,000 apartment units over his 35-year career in commercial real estate. All right, Ted. So thanks so much for joining us. Really impressive and versatile career that you've had. Tell us about your career path within commercial real estate and a bit of background on your current work at Ocean West Capital Partners.
Certainly. Well, I was hooked on real estate back when I was a teenager in my mid-teens. I worked on back when child labor was still legal. I worked on some industrial tilt-up product, which was brand new technology at the time, and just fell in love with that. And as I started college, I had several jobs that were real estate related, some of them very, very high tech, biotech company I worked for several years, and some construction work as well. So I've always been in love with the bricks and mortar side of the business. And as I grew in the industry and my experience and various aspects that I was, forced to look at, you realize how complex real estate is, not just in the bricks and mortar, but also on the financial side. And the bricks and mortar are fun, but there's also money to be made, and there's a great and really interesting strategic side to real estate, which I came to appreciate, at the later stage of my early career. So that really has been where I focus most of my time, is creating value, trying to make sure that our expenses are being held in line and still delivering a first-class product, and building a real estate team that knows exactly what to do in all circumstances. So those are some of the things that really keep me, motivated.
So you've seen the industry from so many different vantage points over the course of your career as an asset manager, as a property manager, as a construction manager. You also have a deep kind of hands-on understanding of the brick and mortar side, as you said, and that things like the HVAC system, which we'll get into more later, technology. You've also touched offices, retail, hotels, hospitality, and you've also worked at multiple market-leading companies. So 2 questions in light of all of that. How has the industry changed from when you started your career to today? And then which parts of the industry do you find most compelling today, defined as where you want to be spending your time and efforts at this stage of your career?
I would say the biggest change in terms of real estate ownership has been that in the early days, people held property for very long periods of time. So you had life companies, even real estate companies like the Irvine company, who to this day, they build or buy and they hold for the long term. That's rare these days. Most, aside from REITs, who tend to have to grow to survive, other real estate businesses are buying and selling and trading assets every 5 years, even 3 to 5 years. 7 years is considered a longer term hold. And a lot of that has to do with where your equity is from, where, how friendly are the financial terms for loans and other forms of debt that you secure commercial real estate with. So the industry has changed a lot when you think that used to be buy and hold for forever if you could, versus planning to exit a project in 3 to 5 to 7 years.
Got it. And in terms of what you find compelling today, and what gets you excited in terms of different investment themes or other aspects of commercial real estate where you think there's a great opportunity and where you get kind of excited about getting involved in, what are your thoughts on that?
Well, I think we're going to see the products that are in, let me put it this way, the products that are in favor now are really residential apartments, usually large apartment complexes, industrial buildings, data centers. Those are the products that everybody's chasing after right now. So those are being priced very aggressively. There's not much trading these days because of pricing and because of lack of supply. But I think the one category that we're seeing real opportunity in is going to be in office buildings, because office buildings are the ones that were hit hard by the pandemic in terms of occupancy, but not necessarily hit hard in terms of revenue, because most tenants continue to pay their rent, with the exception of retail tenants. And in office buildings, retail tends to be a small component of the overall property value. So as people have been in this state of flux about, are they coming back to the office, not coming back to the office, I think the area where you'll see real opportunity is in well-located office buildings that appeal to tenants going forward, which means they have some outdoor component, they have a rooftop deck, they have balconies, they have outdoor areas, amenity space, that kind of thing, where people can choose to be indoors or you can have collaborative work outdoors. And a lot of those buildings don't exist today as a percentage of the overall supply. So you can either buy and reposition a building and add amenities to the building and add those various systems to the building, or you can build from the ground up.
All right, great. Well, great segue into the next question. So looking at things with your asset management hat on, talk to us about the state of the CRE industry today, and specifically how investors are strategically responding to COVID-19. So not so much, the week by week, or month by month kind of fluctuations in the market, but also over the next few years, how is the industry kind of responding to COVID-19? And then also how you would describe the current zeitgeist. Where is the psychology right now within the asset management community in terms of processing what's going on, and what kind of bets are people making on the future?
Well, I think there's a full range of various reactions to this. Some people they're basically waiting to see what happens with tenants. Are they coming back? What quantities are they coming back in? For the longest time, office buildings in general were 10 to 15% occupied during the pandemic, starting in 2020 and certainly throughout 2021. lately we've seen a lot more people coming back to the office. So I would say, and particularly talking to others in the industry, they're seeing occupancy rates in the 40 to 50% range in office buildings. And a lot of that has to do with people are coming in on different shifts. So there's people coming and going. You're getting groups back together that need to be together in order to collaborate. And Zoom is, even though we're doing this by Zoom is just less effective. So I think people want to be back. And we're also seeing companies starting to poke their heads out of the foxhole and take down space. So that's happening. And I think there's an expectation to go to the other part of your question, and that is that the landlords are going to do the responsible thing with the space and make sure that the reentry to the office is safe. Some are doing kind of the pro forma things, putting out hand sanitizer and signage and markings on the floor and the kinds of things we've become accustomed to during the pandemic. But others are looking at it from, deeper perspectives, and they're actually putting together reentry plans, communication plans, talking points. They're investing money in the buildings for HVAC system upgrades, for trying to open up stairwells so people have an alternative to getting into an elevator. There's a lot of things that people are doing right now during this somewhat downtime, I guess you'd call it, to get ready for reentry and to have a compelling product when people come back. So it all depends on the sophistication of the owner, the landlord, and how much thought and time investment they've made in their buildings, as well as how much financially have they been willing to invest in the property to make sure that the return to the office is successful and comfortable and people feel safe.
Touching on the occupancy levels that you cited of 15 to 20% for 2020, and then this year, it's 2021, it's been going up and down. What do you see is the pathway to get back to 100%, full occupancy of buildings? And is that even possible? Kind of, how are you thinking about the timeline and what needs to be true for that to actually happen?
When we get back to 100%, I don't think anyone knows. I think 100% will look different than it did pre-pandemic. I think people are going to need more space. They're going to want more space in conference rooms. They're going to want an outdoor alternative, as I mentioned. We may end up with larger sort of pods where people can work together, or they can spin around in their seat and work on in their own workstation, but they can actually collaborate and still have safe distances. I think also you're going to see people demanding more from their employer, and the employer in turn from the landlord, to make sure that things like ventilation rates are being met. There's also a lot of misinformation out there. So there's a big job in educating the tenant base on what really matters, what moves the needle in terms of air quality and safety within an office space. So there's a lot of work to be done, and some people have started, but until we see how tenants are going to reconfigure their space post-pandemic, I don't think we'll know how to answer the 100% occupancy question. But my guess is they're going to need more space for fewer employees. And there's going to be some mix of largely in the office work and work from home.
Mm-hmm. How do you think about the occupancy levels relative to leasing levels? In other words, do you think that prolonged periods of low occupancy levels start jeopardizing leasing levels? And are we starting to see this impact show up in market indicators like vacancy rates, weighted average lease terms, or WALT? Because right now, as you kind of you commented, it seems like in some markets, or in like some of the major metropolitan areas, you have a decoupling. You have a lot of leasing activity happening at the same time that buildings are not occupied at very high levels. I mean, especially with the recent variant that has popped up. And so, one school of thought, could say, well, the more that those two things become delinked, that you have, prolonged occupancy, that's ultimately going to show up in the leasing levels. Another one is to say, maybe not. Maybe you can have this delinking between those two numbers. So how are you thinking about the relationship between occupancy and leasing?
Well, I think what we've seen lately and very recently is some very large blocks of space are being taken down by big players in the industry. So tenants and landlords are out still investing in office space, all types of office space. And so I think what that says is we all believe that the space is going to be filled. Again, we won't know exactly what that's going to look like, but leasing is picking up, occupancy is picking up. And I think the indicator that speaks to me the loudest is the fact that there was tons of sublease space on the market. And if you look at some of the major metropolitan areas, a lot of that sublease space has gone away. And what's happened is they've either leased it to others or as a sublease, or they've taken it back themselves or decided not to sublease it. So that's a good indicator that people believe they're coming back to the office, and that collaboration, face-to-face collaboration, is important to their various companies and to their company culture and to their programming of training employees and bringing employees along to get the most out of, productivity, collaboration, and just overall workflow. You got to be in the office. So that's what it says to me. And it's up to landlords to make people feel safe in that environment.
I want to get some firsthand experience from you. And so at Ocean West Capital Partners, you're actively involved in kind of leasing, buying, selling, and then also the more operational sides of the buildings within your portfolio. What has been your own experience managing through the pandemic in terms of, your own experience leasing properties, what you've been doing within the buildings within your portfolio, to respond to what's going on, and hitting on some of the things you've mentioned regarding improvements? How have you kind of, as an operator and asset manager, kind of managed through this experience?
Well, I'll start with leasing. I mean, for the longest time, leasing was just dead. It stopped. And it really hit retail hard. And we spent a fair amount of time with the small amount of retail that we do have, trying to resuscitate and keep those guys interested in coming back. Some made it, some didn't. There's got to be support retail in certain office products. It's essential. So that has yet to really recover. In terms of office leasing, as I said, it was just flat. There was no activity. And we endless leasing calls with all the various large brokerage firms. And we get on the call and they say, well, there's nothing new this week. There's nothing new for the past 2 weeks. But that's changed. And what we're seeing in almost every submarket and major market that we're in is that leasing is increasing significant and very recently quite significantly. So we're doing lease deals now, where for the longest time in a given building, we didn't have a single lease deal that we cut in the last 18 months. Now we're actually executing lease deals. We're doing renewals, which tell you that tenants need their space, want their space, and expect that their space is going to be used in the same or similar way than it was pre-pandemic. So those are very encouraging signs. And these are all different size companies. going down to entrepreneurial companies, to sort of medium-sized companies, and then the large guys have really been taking down space lately. So I would say that I'm very encouraged by what's going on. I think Omicron is going to put a wrinkle in that. I don't think any of us are naive about the cycles that this thing's going to go through. But I'm most interested about how people are going to view this pandemic over the longer term. In other words, the more people get convinced that this is going to be endemic, we have a segment of the population that is not going to get vaccinated, and the world is not getting vaccinated very quickly. Variants are going to arise, and we're going to have to learn how to live with it. And we have, in talking to our tenants, they feel the same way. They think they've got to convince the employees that it's safer to be at work than it is to be at home, which in reality it is, because of just sheer ventilation rates and volume. But that's a job that we have to, tag team with the tenant. We have to help the tenant convince their employees that it's safe to come back to the office, and the office is a safe place. And so we show them the things that we've worked on during the downtime of the pandemic, and we talk to them about initiatives that we're involved in now, sort of improve ventilation rates, to validate our ventilation rates, filtration, all of the things that everybody, I think, thinks they know, but it's actually a lot more complicated than that. I mean, if people really realized how much virus gets through a filter, I think they would be less concerned about filtration rates and more concerned about ventilation rates. So all of that, I think, is our job to communicate to the tenants and the brokers. The brokers have to get tenants comfortable to sign a lease. And I think landlords that can instill that confidence will be much more successful.
So picking up on those comments. So historically, how is health, wellness, and safety, specifically as it relates to things like indoor air quality and the HVAC system, factored into your valuation analysis and kind of buy sell considerations or calculus with the properties that you're investing in? And as a couple of follow-ups, is this something that in the past you see as an area where you and others can differentiate, compete, and win on deals on those factors? And then, today, as we're going into year 3 of the pandemic, has that changed at all? Has now this health and wellness and safety become even more important, or is it basically status quo?
I don't think it's status quo. Before the pandemic, there were a number of larger companies that wouldn't go into a building if they didn't have an IEQ program. So people were already, mostly larger tenants, were already getting educated on how much their employees cared about wellness, what was happening to the workforce. As younger people came into the workforce, they were more aware, and it was more of a concern. That's been our experience. And so companies were responding to that, and companies were instituting indoor air quality programs for the last probably 8 to 10 years. It's been fairly common. But it was kind of, you had a baseline and you did your testing, and that was the end of it. Now, post-pandemic, I don't think anybody knows exactly what's going to happen, but people are far more concerned about this issue, and they want to get educated on the things that make a difference. And there's a lot of sort of urban myths about indoor air quality and what constitutes high quality indoor environments. And so, again, there's a lot of educating to do, but we're also getting new tools. There's new technology to be able to validate whether or not you're achieving those metrics. And I think turning that into a leasing tool is what's really going to move the needle in terms of people taking that into account and ultimately showing up in valuations. It won't be that, a building is going to increase wildly in value if you have a great IEQ program and you're doing wonderful things to validate that. I think what it is there will be more and more companies that simply won't consider leasing in your building if you don't have a good handle on this. So it'll be a differentiator by exclusion. People will say, well, how's the operations in that building? How sophisticated is this landlord, and how much do they know about the built environment? And are we going to be safe? And I think those will become far more common questions and far more powerful in making a decision about where to go with your next real estate lease.
Anecdotally, I mean, obviously this intersects with Safe Trace's business quite a bit, and we spend quite a bit of time in the commercial real estate industry talking with owners and tenants and other managers and operators. And it seems like in our experience, there's a bit of a delta between how much indoor air quality is talked about versus what is actually happening. And there could be a few drivers of this delta. One, indoor air quality is still, in many cases, not well defined, or it means lots of different things to different people. From a budgetary standpoint, it's not always clear that it's being resourced, or maybe it's pulling from different pools of money. And then now the need has gone up and it hasn't kind of kept pace, or the budgets haven't kept pace with this. And then also, I'd say, really importantly, the ROI is not always well appreciated or understood. And, in some cases, people are skeptical at all, on the owner side, that there's real ROI for indoor air quality. It's something that is not just a cost out the door, but it actually can help you save OpEx or spend your CapEx better, or that you can actually command a premium on your leases or otherwise. Do you agree with this assessment, that just generally the delta between the talk versus the walk? And how do you think about ROI of IAQ? When you're looking at, well, you could install sensors, or you could pay for test and balance services, or you could, make a retrofit or an upgrade in your HVAC system. How do you think about whether that is something that has an ROI or payback to you?
Well, really, to have an ROI or payback, it has to make a difference in either reducing expenses or creating value, right? Those are the two things that happen in a building to add or diminish the value. So my belief is that people are already getting the message that this is really a critical and important issue. And I think that the landlords that are smart and sophisticated and get it will be focusing on this, and that will start driving a delta between the talk and the walk, and it'll start driving a delta between people who do it and do it well, and people who are just putting up signs and talking about it. I think what you hope you never get to a point where you get called on it, and you're a landlord that talked but didn't do any walking at all, and then the tenant finds out that it was just fluff. You really, and to me, that's part of the problem. Part of the problem is it's a hard concept to get across to people because it's quite scientifically based. And when you get into the nitty gritty of it, it gets complicated. And I think that you have to be able to validate that you're achieving what you set out to achieve in terms of what is the quality of the air in this building, what are you doing about ventilation rates, and how are you controlling cost if you're increasing ventilation rates. And so that shows up in operating expenses, which also hits tenants, which also can diminish the value of a building if all you do is increase expenses. So if you have a tool that allows you to calibrate what you're doing with your HVAC, assuming that you have a relatively updated or sophisticated HVAC system and EMS system, you can really hit the sweet spot if you have a good program to validate what you're doing. And for a lot of people, it's just, oh, we're spending another 20,000 on indoor air quality. Great. But they don't really know what people are doing with it and whether or not it's achieving what they want it to. And I think the difference comes down to people who actually do something and it's effective and you can communicate it and demonstrate it to the tenant, because then it'll start differentiating the rent, and then you're into something that really does have a return on investment. Just talking doesn't do it. You actually have to put systems in place, put controls in place, and then you have to validate that and demonstrate to people and be able to communicate it.
Over the next 5 to 10 years, do you think that, I mean, kind of what you're describing is a winners and losers type of dynamic in the market, or parts of the market where some people get it and are going to evolve and improve and invest in this, and then others will not. And ultimately, the proof will be in the pudding eventually of, the winners should stand to benefit from that and the losers should stand to be adversely affected. But, the other thing is that it just requires a level of sophistication, of people being able to do these next order kind of analyses on things, to take the step to validate and then to think differently and more rigorously about this component of a building. Are you seeing that, like signs that is already happening right now in your own experience, or some people already evolving in that direction? And if so, how and where? Is it like kind of the upper 1% of the Class A office market? Is it in even non-office spaces, other manufacturing? Like where do you see signs of life that this kind of new future that you're describing is actually taking root?
Well, I'll tell you, when I get brokers asking me about IAQ, that never happened before. So to me, that's a huge indicator that it's moving in the value direction of real estate. Once the brokers are being asked about that by prospective tenants, then you know that you have to do something about it. And you have to educate your brokers and get that message across. And that's how you'll differentiate yourself. But it is definitely happening. And people are working on IEQ programs. Some of them never even knew what IEQ stood for, and they're working on things. Others have been very sophisticated for some time. As I said, for over 10 years, in some cases, people have been paying a lot of attention to IEQ. So, it's going to take time. It's going to take time for all of this to shake out, because you mentioned, weighted average lease term. As tenants come back and they're hesitant, they sometimes will say, well, I'll renew my lease, but instead of signing a 5-year lease, I'm going to sign a 3-year lease, or I'm going to sign a 2-year lease. So it's going to take some time to shake all this out and for people to understand how their employee base responded to the things that they did. But I think there will be winners and losers, but that also creates opportunity, right? If buildings lose out and those buildings are actually hit in value, then they become an opportunity to buy it, reposition it, improve it, both not just cosmetically, but improve the systems and be able to present it to the marketplace as a new product. Mm-hmm. So those kinds of value add projects, you can get great returns on that. But it's not something that happens overnight. Mm-hmm. And we have yet to see the full impact of this pandemic downtime on lease rates and occupancy rates, et cetera, as we talked earlier. But my vote is that the ones who are sophisticated, know what they're doing, and make it a priority will, in the end, see value result from this. Mm-hmm. And it will mean improved maintenance. It'll mean an improved environment, and all those things that I think people who are in the industry and aware of this know make a difference to employers in terms of productivity, sick time, all of those things that can result from bad air quality or just not paying attention to the basics. And now not paying attention to some pretty sophisticated concepts that are going to take over this part of the industry.
Great. Well, thanks so much for joining us today. So, as always, we leave some time at the end of our discussion to give the floor to the guest to share any parting thoughts or any topics that you would want to cover that we didn't hit on with the questions, or anything else on your mind. So the floor is yours.
Well, I think the main thing I feel good about is that things are starting to come back. And I think this is the critical juncture. This is where we can really start to make a difference. As those people come back to the buildings, we can start to communicate this. We can see whether or not our investments or moves that we've made during the downtime are really working. And we're also going to get a reaction back from the actual occupants. So the employees of our tenants are going to come back and they're going to say, hey, what about this? And what about that? Or I read about this, or my buddy works at another building and they do this. How come we can't have that? Right. And so we're going to get re-educated as tenants come back. And I think we'll learn a lot, and how quickly you adapt to that feedback loop is going to really make a difference as to how confident people will feel getting back into the built environment and working in a collaborative situation. Obviously, we got to get a hold of, this pandemic and get more people vaccinated. And there's a lot of macro things that have to happen. But in the parts of the world, of our own world that we can control, I think we really have to take advantage of that feedback, act on it, and go looking for more and more feedback, so we can bring the end user into the process and also educate them at the same time. And what we find out and what we do and what's successful and what's not successful, we will communicate to our investors. We'll also communicate to the brokerage community. And then you'll really start to see all of this, I think, come together and create some value. So to me, I think this is a critical time where people are starting to step up, sign big leases, sign longer term leases, and make commitments to real estate, where everybody before was just wondering what was going to happen. And I think now we've got the indicators that sublease rates are down. The amount of space for sublease on the market is dropping, and we're starting to see people leasing direct with landlords. This moment is really the transition, the watershed moment. Did we do enough? Do we have to do more? And I think the answer is going to be, we probably are going to have to do more. And landlords are going to learn what creates value and what doesn't, and what in the minds of tenants makes them feel comfortable and what's just fluff.
All right. Well, excellent closing thoughts there, and lots in there to reflect on. Thank you so much, Ted. This was a great discussion. We're really grateful for your time and perspective, and wish you a happy holidays and a great 2022.
Same to you, Eric. Best of luck, and Happy New Year. I think that's the best thing we can say to everyone at this point. So pleasure to be with you.
Great. Thanks so much.